Guys, today let's talk about price action strategy and market structure analysis. For every beginner trader watching this video right now, I need you to understand that the only thing that is happening in the Forex market is buying and selling. So it's either buyers are the one in charge of the market and you are expected to be buying as at that time, or sellers are in charge of the market, which means you are supposed to be selling at that particular time. So from my chart right here, I will be deleting everything on my chart right now, so we start afresh. Now on my chart right here, you can see some things that look like candlesticks in two different colors, which is the green and the red. Now the green ones here represent the buyers and the red ones represent the sellers, and those things here are what we call candlesticks, and the candlesticks are actually the prices. It is when if the prices is pushing up, you will see a green candle, and when price is coming down, you will see a red candle, just like you are seeing right now. Once you see this market now going up and it moves up above this particular one, it will start giving us a green candle, and when it start coming down, just as we are seeing currently, to be giving us a red candle, meaning the market is selling. So what I want you to understand right now is when the market is pushing up, it means buyers are in charge, and when the market is coming down, it means sellers are in charge. So you that is coming to the Forex market, you need to learn how to do the analysis to know when to buy and when to sell. So we'll be looking at the trend line, the trend of the market, which means, just like I said, we have the buyers and the sellers. They are the only thing that is happening in the market, buying and selling. We only have two trends, which is the uptrend and the downtrend. Now the uptrend means buyers are the one in charge of the trend. Using a layman's language, when you hear me talk about trend here, it means the people that are currently on board. For instance, in our community today, if we don't drop an album and we said the album is currently trendy, a song from his album is currently trendy, is the one everybody is playing. In every party they are playing the song because the song is the one on board. You understand? Now if we say uptrend, it means buyers are the ones on board. Buyers are the ones currently trending the market. So what is expected of you as a retail trader is to look for an opportunity to join in that particular buy trade. So the opportunity is to know when next to place your buy. We don't just buy because we see price pushing up. Okay, so in this case we'll be using a particular strategy called a price action. And now, what is price action? Price action is understanding the candlesticks information. Remember I said something earlier. I said those things that you are seeing right here are called candlesticks, right? Those green and the red are called Japanese candlesticks. So you will hear me mention candlesticks often and often, so make sure you understand what I'm saying. Now price action strategy means understanding the candlesticks information. That means every candlestick here carries an information. Every candlestick that you are seeing right now carries an information. It's either the candlestick is giving us an information of buyers are in charge, or the candlestick is giving us the information of sellers are in charge. So as a Forex trader, how do you know the information of a particular candlestick? Alright, so now if you want to learn how to read those information, you need to first of all learn the market structure, because the market structure is actually the language of the Forex market. Just like every other thing, if you want to be a surgeon, you need to go to the medical school and read about make sure you understand the language of those people that read medicine also. You understand? They have their own language. They know the names of everything, every bone in the body. So if you come into the Forex market, you also need to learn the language of the market, the names and everything about the candlesticks. So the language of the Forex market is called market structure. Now let me show you quickly what market structure is practically. So from my chart right now, remember I said something earlier, whenever you see the market coming down, it means sellers are in charge. And once you see the market consistently coming down like this, breaking support zone, form a new support, pull back, break this support to form a new support, this is called a down trade, meaning sellers are the one in charge, they are the one on board. And whenever you see something like this, you see the market going up consistently, breaking resistance, forming new resistance, pull back, continue, break this resistance to form a new resistance, pull back, continue, break this resistance to form a new resistance, it means buyers are in charge. This is what is called uptrend, while this is called downtrend. Now something is actually common in these two trends. one thing is common, which is a pullback. Remember, this is an uptrend. If you observe, the market will buy, it will do a little sell, it will continue the buy, break a particular resistance to form a higher high, it will do another little sell, it will continue the buy, it will break this resistance to form another higher high, it will do another little sell, it will continue the buy to break here to form another higher high, it will do another sell. Now, just the same way this was giving us a small sell, which is called pullbacks. So those sell in between the uptrend, it is called pullbacks, or you can also call them retracements. The market actually retraced backward before the continuation of the original direction. Okay, so right now in a downtrend market, you see that the market will sell, pull back, do a little buy, continue the sell, break a support to form a new support, do a little buy again, which is called pullback, continue the sell, break this particular support to form another new support. Now, so on and so forth. That is what is called market structure. Market structure, the definition of market structure here is the original, the traditional movement of prices. That is how the market they move. You need to understand how the patterns that the market use in moving, the patterns that the market use in giving you blueprint. Now, one of the patterns here that I really need to understand in this explanation is price. Even if buyers are in charge, you will never see something like this straight. No, it will not be going straight. Price doesn't move straight because the price always fluctuates every second. You understand? So you will always be seeing buy, do a little sell, continue, do a little sell again, continue the buy, do a little sell again, continue the buy, do a little sell again, continue the buy. Now, so long we have something like this, which is called higher highs and lower highs, this is what we call uptrend, because the market was actually giving us step up. It was actually breaking resistance towards the upside consistently. You understand? And for instance, if you see the downtrend, you will see that the market was actually breaking a particular support. It was actually breaking it consistently. It was stepping down. It was going lower, lower, lower. After this support, we do the pullback, it continue the sell, break here, and it form another lower low here. It pull back again, continue the sell, break here, and it form another lower low. Now, this is what is called market structure, the patterns which price move. You understand? The patterns which price move. So let's see that from the original chart. So if you see correctly right now, this is a downtrend. Remember, I told you guys that we only have two trends in the forex market. It's either the market is a downtrend or the market is an uptrend. And in a downtrend means sellers are the one on board, they are the one in charge, and you will see price going down consistently. So on my chart right now, on this particular time frame, let me quickly show you a trend. This is an uptrend. Let me mark the uptrend for you for better understanding. Now, this is an uptrend. I just marked this uptrend so you'll be able to understand what I'm saying. Now, market structure in this uptrend, just like what I explained earlier, is the market will buy, do a little sell, do another buy, do a little sell, break above, do another buy, do a little sell again, continue the buy, break above here again. Now, so long price keep breaking resistance, forming higher high, it means buyers are still in charge until you see price continue and break a major support zone. That will now be called a reversal pattern. You understand? Now, this was an uptrend, but you can see that from here the market reversed to a downtrend. So you need to learn how to identify the trend and how to enter the trade if you want to follow the trend. If the market is an uptrend, you need to learn how to follow that trend and when you will be executing the buy trade. So in my next video, I'll be showing you where to place your buy, where to place your sell as a forex trader. So guys, please, if you like this video, do well to follow this course with step by step. Don't jump any process. The little you understand in this particular video will actually help you in my next video, and that is how you learn and that is how you grow in knowledge as a forex trader. God bless you guys, and see you in my next one.